Hey guys, by this time next week, we'll have a new president. Stay tuned. Hey guys, it's your favorite mortgage guy, Steve Rockefeller here. You know what? Like the sign says, go vote. Take 10 people with you. You know why? If you don't vote, you can't complain. I mean, seriously, you just can't complain if you don't vote. Here's the thing. You know what? That's the best part of democracy in our country is that we do have the ability to vote. Today is November the 1st. Can you believe we're 2 more months and we'll be at 2025 and everybody's getting ready to get ready? And I'll talk about that in just one second. This time next week, we will have a new president. I mean, it's a fact. We're going to have a new president. Who knows what that's going to look like? But what I do know is I've loaned in all kinds of administrations, pandemics, recessions, you name it. People buy houses. All right, let's start with your questions here. So, Steve, what is PMI and how do I get rid of it? Okay, PMI, MIP. PMI is private mortgage insurance. MIP is mortgage insurance premium. MIP is for an FHA loan. PMI is for a conventional loan. And that is if you don't have a 20% down on a conventional loan, you're going to have private mortgage insurance. There are ways to mitigate that up front with a couple of different things that we can do for you. And we'll have to talk about that on an individual basis. But if you've closed a loan with PMI, the only way to get out of it is, first of all, you'll have it for 2 years unless you refinance the loan. And that's one way to get rid of it. Or you can come in and put the difference down and ask the lender to get rid of the PMI. But if you close with PMI, you will have it for 2 years. Now, MIP for FHA loans, no way to get rid of it. You're going to have it for the life of the loan until you refinance on your loan. Now, if you've had your loan for a couple of years and your house has gone up in value, you can get rid of it by asking the lender on a conventional loan to waive the PMI if enough equity is there, if you made every single payment on time. If you've been late, forget it. One time late, you're not getting rid of the PMI. All right, Steve, I'm making more money than I ever thought I would on the sale of my home. Should I put it all into the next home? Are there going to be any tax ramifications? I cannot answer that question. I'm not an accountant, but you can Google the answer. And the answer on Google says that if you've lived in that house as your primary residence for the previous 2 of the last 5 years, then you will not pay capital gains. Now, you don't have to move that money into your next house. What I will tell you is that question comes up a lot in conversations with clients. The best part about that answer is this. Would Steve Rockefeller move 100, 200, 300 into the next house? No, I'd put that money into an investment or to a high yield money market account and let it make me money. And then later, maybe I'll do something or I'll augment the loan by dropping the balance and have my payment recast out to me. That's an option that we offer here. So if you want to talk about that, just call me. What do you think the election will do to rates? Okay, that question comes up all the time. Nothing. I can't answer the question because they've already got this built in as to if this party wins or this party wins, what the impact is going to be on rates. So it really doesn't matter because the Federal Reserve controls interest rates. The only thing the president can do is instruct the Treasury to buy bonds to artificially lower rates. It's called quantitative easing. Does that happen all the time? No. But if it's recommended by the Federal Reserve or even the Treasury recommends, then yeah, they'll do that. But they're not talking about that right now. Now, they did talk about recently how they've been selling loans off the books to retain capital. Now, that's a good thing because if they do need to buy rates, they can buy it down. Steve, you've taught me to watch the financial news. I don't understand what they're saying on this news channels. Can you help? Guys, that's what I try to do. I don't want to load you up with a bunch of data, and I'm going to talk about that in just a few minutes, but I want to make sure that you know that it's important that you watch this stuff if you can. If you just go cross-eyed watching it, then just turn it off. But remember this, good news for the government is not good news for the mortgage industry. And bad news for the government is good news for the mortgage industry, like the jobless figures this morning. They called it BLS, although somebody said it seems more like BS than BLS. That's Bureau of Labor Statistics. I'll talk about that in just a few minutes. I keep getting these refinance offers. What do? I'll tell you what you do. You ignore them and you call me because remember, there's 100 pennies in a dollar. You've heard my good friend Scott say that several times on the segment. There's only 100 pennies in a dollar. So these companies that are offering you rates that you're not even seeing anyplace else, then why would you believe it? Okay. So as I said, this time next week, we're going to have a new president. Do me a favor. Like it says here, go vote. I already voted. Take 10 friends with you because it's important. It's part of democracy. Go vote. Now, according to Freddie Mac, here's the best part about some of these stats we're seeing. According to Freddie Mac, house prices are up 3.6%. That means on a $400,000 home, you gained another $14,000 in equity in the past 12 months. Another example from our good friends at First American Title, those who bought a house in 2019 are $159,000 richer. But those who rented in that same period of time have cumulatively lost $89,000. Now, on the other hand, homes are sitting on the market for up to 38 days with sellers offering incentives now. Now, it could be seasonal because of the holidays, and it could be election woes as well. But sellers are now offering things like closing cost or buy downs or some other things that they're doing. So what I want you to remember is this. If you're in a crunch because you wrote a contract on another house and you've not sold your house yet, one, you could be in trouble because that seller is going to expect you to perform because you contracted with them, which means they contracted to do something else, which means that person they contracted with, and it's a domino effect. So sell the house because the market gave you all this extra equity. And if it costs you an extra $10,000, remember, it's not your money. The market gave it to you. Now, the other thing about free equity, I lost my train of thought for just a second there because I was going to interject something. The other thing about free equity, remember, if you've lived in the home for the previous 2 of the last 5 years, it's not a gain. It's a gain in your pocket, but it's not a capital gain. So don't be greedy, sell the home. Now, something I can also help you with, if your house is sitting there and you're starting to like panic and bite your fingernails, I've got my List and Lock program. It's a great program for you to talk about with your listing agent, which would aid your buyer in buying the house. Because if you can buy the rate down for the buyer, hey, it's a win. You're out of the house, they get a low rate, everybody's happy. Now, how many of you know someone that wants to buy a house in 25? A lot of you. Are they getting ready to get ready? Whatever that means, have them call me now. And I'll tell you why, because a pre-approved buyer is better than a pre-qualified buyer. Let me have a confidential financial fitness checkup with them. It's the only way they're going to know. Now, it's no secret. It's cheaper to rent, but you just heard me say people lost 89,000 versus the 156K in equity. One of the things about renting, you have no control, and on home ownership, you have control and you build equity. All right. So BLS figures this morning, Bureau of Labor Statistics. We heard about them this morning, and it was not very friendly to the mortgage market. The bond market got a little worse today, which means we're going to see a bump up in rates. We kind of feel like that next week things are going to be a little more exciting and might benefit because the Federal Reserve is going to speak on the 7th, but obviously we won't see that until after the 7th at 2:00 when they meet. Then the truth is going to come out because today's report was certainly a head scratcher. Here's why. How, when you lost 164,000 full-time jobs, 224,000 part-time jobs, along with 183,000 jobs from between 16 and 19-year-old for a total of almost 600,000 jobs, how is this a win to the bond market? It's not. It's not. The revision's going to come out guaranteed, just like we've learned earlier this year. Somebody made a mistake with their calculations or however they want to word it, because, these media pundits, they do a lot of different things with their words. How is that a win? We don't know, but hopefully we're going to start to see a decline in interest rates after the election, not because of the election, but because the Federal Reserve is revising their stance to that 2% inflationary rate. So, guys, if you need me, you need to call me. You need to text me. If you got questions, you need to send them to me. You need to send your friends to me. Get ready now. Don't get ready in January where you're not ready and you don't know what you qualify for. Just have them call me. You got all my contact along the side and down below here. Go out there and friend me on all my social medias along the side here, or maybe it's on this side. Go ahead and friend me on all that stuff. And listen, if you got questions, comments, whatever you need, reach out to me. I'm here to help. Your favorite mortgage guy, Steve, on November the 1st already. I hope you guys have a phenomenal weekend. Bye now.